Hello, this is Charting Man Dan of TheChartGuys, where we teach the little guy and girl how to utilize charts to manage their own trades and investments. What do I mean by the little guy and girl? Well, we just had two directives signed halting the implementation of a rule that requires financial advisors to act in the best interests of their client. Let that sink in a little bit. The big wigs on Wall Street can play with your retirement and hard-earned money without your best interests at heart. We currently have hundreds of members taking charge of their financial future, and we would love for you to come check out a free week with no credit card required to see if our services would be beneficial on your path to financial independence as well. What we offer, we have a separate course of over 5 hours in length on when to enter and exit positions. And in terms of what we do daily, we have nightly videos, key levels updated each morning before the bell, 2.5 hours of live daily webcam coverage in the morning and in the afternoon, and over 7 hours of educational videos. All of these links can be found in the description of this video. Come check us out. Thanks for watching. Let's get on to the technical analysis. Hello everyone, can't pass up a day like today to cover gold and the miners. So we're going to start with the dollar, and we obviously had an all-out dump, but there was a nice little bearish reversal head and shoulders pattern here where we had our left shoulder, the head, the right shoulder, and the clear neckline of support was a little double low of consolidation. So that neckline right here, we had the low 101.45, the head formed, the right shoulder formed, and then our low again 101.44, 1 penny lower. And then before the break, well, actually we saw a little break, little bounce attempt. So that was a little bit of a clue before we had the reaction to the FOMC. That happened at noon. We got that bear break. Little bull recovery attempt and then an all-out dump. We are very oversold on the dollar. We will look for an oversold bounce to play out overnight. But the bears are in control. And the good thing for the bulls of gold is what this does on the daily time frame for the dollar. After our double top, we had our low, and we hit a lower low, but the bulls held that key support. We are not holding at this test. And that bearish reversal head and shoulders pattern I was drawing a lot more recently, it does still stand. It's not as textbook, not as perfect. Maybe this guy has a hunchback on his right shoulder. That's a possibility. Certainly a bigger right shoulder, but the neckline is still very clear, and that's down here at 99.43. So that 99.43 double low, the same exact thing that just played out on the shorter term time frames on the hourly, is playing out much longer term here on the daily. So if we get a break of this level, it will change the trend on the daily time frame, which has been very, very bullish since May. So 8 months plus, make that, 10 months? A lot of months. It's been bullish, and this is a potential reversal pattern, and it's looking a lot more likely, obviously, after the dump day today. So we're going to keep an eye on it. We're not going to head straight down there. We're going to see some bounces along the way. So this hump shoulder is going to get even bigger, and we will keep a very close eye on 99.43. That's the bottom line. So what did this do for gold? Obviously, a very bullish reaction. And we had an initial bull move heading into 2 p.m., some consolidation, huge bull move. And the good thing about this FOMC reaction, and I was live on YouTube here publicly when it was going on, and it held up. We didn't have knee-jerk back-and-forth reactions. We had the initial bull move. We consolidated. And after a big green candlestick, you want to get that low of consolidation to have something to be working with in terms of support. So to have a clear level so you know, okay, if this level breaks, the bears are taking over in the short term. So we pulled back initially. We bounced off of 1209.58, and then we started heading back towards the high of the day. So that right there, I put this line here, and I know, okay, that's our key support level. If we don't break the high of the day and then we come down and break that support, that's going to be a little lower high and then a lower low, and we're going to continue to consolidate. We held that support. We broke a new high of the day, and from there it was just higher lows and higher highs. So a big-time bull move on gold. You see it here on the hourly time frame. We are overbought on the hourly. The RSI is up at 80, so we're going to look to consolidate a little bit as of right now. Healthy, normal consolidation going on. In the daily chart, this didn't really do a ton in terms of turning things around. I mean, obviously, it gives the bulls momentum, and we did take back, 2.5, 3 bearish days here on this pullback, and it did give us a little higher low and a higher high, and we closed above the 10-day moving average, but the bulls still have work to do, and I would not be surprised to see a lower high form after a little bit more upside, and then consolidate, and we have to form a higher low on the daily time frame. So we're not going to just shoot right back up to 1230. In my opinion, we're going to have to consolidate, form a higher low. We could still see bull momentum carry over into tomorrow. It depends on what the consolidation looks like overnight. But as of right now, we are going to have to see the bulls form higher lows and higher highs as they attempt to get back towards their recent levels. We are forming a bullish reversal candlestick on the weekly time frame. That's a good sign for the bulls heading into next week. We still have 2 trading days left to go, but putting a stop to the pullback and obviously shifting momentum very significantly to the bulls here. So I want to look at JNUG on the 5-minute time frame because it was a really nice example of inside candlesticks. And inside candlesticks showing a bull break where we had the initial bull reaction. The next 5-minute candlestick was an inside candlestick with a tighter range. Next candlestick, tighter range, tighter range. 3 inside candlesticks in a row, volume declining. If we zoom in on the 1-minute time frame, this is going to be an equilibrium pattern, which I talk about in all my videos, where we have higher lows and lower highs. So inside candlesticks are just a macro way, a more zoomed out way of visualizing the higher low, lower high tightening equilibrium pattern. So it happened after a breakout. We saw a battle between the bulls and the bears. The volume saw a spike when we got the break. And as soon as we broke 675, that was a bull signal. While this was going on, I was looking at a potential bottom fishing play, looking for, if we were going to turn things around, to be looking for a bearish entry opportunity, if not already in a position, because we saw JDST forming multiple tops. We had a bit of a double top on JD, or I should say multiple bottoms. So we had the same thing with inside candlesticks forming with higher lows, lower highs, tightening range, and was looking at a potential bull entry here for JDST with our stop loss just below the low of the day. And that was because the risk was very small. If making a bullish entry just above 14 or make that 1350, let's say you enter at 1340 on a 1,000 share position, on a $13,000 position, you're risking $100 before you would get stopped out. So I did like the risk to reward of that potential scenario to make a bullish entry before a signal was given on these inside candlesticks. Obviously, we saw further downside, so that would have ended up stopping any bears out. And of course, stop losses are essential on any bottom fishing plays. But the bull signal was given here on JNUG when 675 broke, and then to top it off, we broke the high of the day, 681, and then from there, we continued to the upside, and we had more consolidation inside tightening ranges. We bounced off of 731, 730, and then 731. So right here, I was watching and saying, okay, I've seen 730 hold twice in the past 15 minutes on 5-minute candlesticks, and if 730 breaks here, that's a bear signal to either lock in profit or go bearish, and that never happened. The bulls held that level, little double low of consolidation, and then continued to the upside even stronger. So the bulls ended on an extremely strong note. We did not see profit taking here. And let's look now on the miners. GDX, huge strong close. So can't disregard the volume and the close. Closing above the middle Bollinger Band, not seeing a lot of profit taking. Bullish MACD cross is closing in. We've got the 50-day moving average resistance next in the 2330s. We'll be watching that level tomorrow. And a big time turnaround. You can see in just one bullish day, we took back a lot of the downside days that we were seeing back in early March. And the weekly time frame, more importantly, look at this 200-week moving average. We held it on the dump week 2 weeks ago. We held it last week with a bullish reversal hammer. We're confirming that reversal hammer and seeing some nice upside. So this is an ideal end of the week for the bulls. Of course, we have 2 more trading days left to go, but if we close here or better, the bulls are going to be looking good into next week. And it's a sigh of relief stopping the downtrend and now trying to form higher lows and higher highs to recover to where we were. And again, we're not expecting to just shoot right up to those levels. We are going to be looking to consolidate. Maybe we'll start tomorrow with some upside and then we'll look to consolidate. But we have to be keeping an eye on these hourly RSI levels before making an entry, because we do not want to get an entry if they are overbought in the mid 80s. GDXJ also strong, big bull volume, and a very strong close up above the 50-day moving average. So that's already out of the way. And we've broken pretty much all of the resistance until February 27th. So for GDX, February 27th, we would have had to have broken 2342 to be in the same positioning. And we're still fairly good amount below that level, over 1%. So that just shows in terms of previous price action, GDXJ a little bit further along in recovery. So the 200-day moving average resistance of 3906 is the next target to be looking at for the bulls. Bullish MACD cross on the verge. And again, bullish reversal. Dragonfly Doji last week being confirmed this week. Fending off a bearish MACD cross on the weekly time frame. And we now have a new very important support level, the low of this consolidation. If we see a bounce attempt form a lower high and then we come back down and lose that support, that is a big midterm looking out for multiple months, that's a big red flag for the bulls. So that's our new must-hold level that the bulls need to hold, I would say, for the next few months. That support that established the low of last week must hold. So a very exciting day for the bull miners, and we had a lot of people locking in some profit before holding overnight. Certainly agree with that. I would be looking to lock in at least some of that position, and I would not be looking to enter any positions at the end of the day. There were some people looking to either enter the bulls or the bears, and I just don't like a scenario where we don't have, well, the scenario that was in my mind was we don't have any signals to be going bearish, and yes, we are overbought on RSI and time frame, but I don't want to have my handcuffed overnight while gold continues to trade with bullish momentum, and then I might wake up and, where I normally would have a stop loss during a regular trading day, my losses would be more magnified because, again, I couldn't do anything overnight while gold continued to see upside. So I didn't like going bearish with all the bullish momentum at the end of the day, but I didn't like going bullish at the end of the day because of the very overbought conditions. So the entry was to be made earlier in the reaction to the FOMC, either right out of the gate. We saw the market and gold react within the first 5 minutes. It was clear they were going both in the direction for the bulls, and we weren't sure if it was going to stick or not, but it certainly did stick. Then we got that bullish reaction with the inside candlesticks and a new high of the day. And then from there, the bulls just really affirmed their strength and control. So I didn't like a new entry here at the end of the day. If you are in a bullish position and holding overnight, that's perfectly fine because you are profitable at this point, and there's a less risk because you are already profitable. And we'll have to see how much momentum we get to the upside tomorrow. Again, we can't disregard these really strong closes on these miners, and we'll see if we get some nice healthy consolidation in gold, a little oversold bounce on the dollar, and we'll see how we start things with a nice, fresh, clean slate tomorrow morning. So I appreciate you watching. Hope you had a fun trading afternoon. We'll see you tomorrow.